All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Thursday, everybody. Today's December 12th, 2024, and our top story this morning is once again inflation, and once again central banks and the lunacy that is going on over there. This morning, we got the Producer Price Index, or PPI. This measures inflation a little bit further upstream. Yesterday, we had the CPI, the Consumer Price Index. It came in line with expectations, but it showed inflation was rising yesterday for consumers. Well, today, we're measuring a little further upstream at the producers, and inflation is rising even faster over there, and it's getting worse. PPI came in higher than expected. And guys, it is worse than it looks. Not only did PPI come in higher than expected, PPI came in a lot higher than expected. And not only did all that happen, but they actually went back to last month's numbers and they had to revise those higher. Very quiet. Upward revisions in inflation readings now. Now, we've seen this stuff with the jobs numbers. We see them get downwardly revised after the fact very quietly, and everybody pretends like, oh, the labor market was strong. But now we're starting to see this revisions after the fact in PPI as well. Let's get into the numbers, shall we? Headline inflation for PPI, 3.0% year over year. That's versus 2.6% expected. A huge miss high for PPI. All right, companies' profit margins are getting squeezed here. You're seeing the producer prices are rising faster than the consumer prices. That money comes from somewhere. It's coming out of profits. Well, never mind stocks all-time high day in and day out while profit margins are getting squeezed. Never mind because some chode in the West Coast said a thing about AI and quantum computing and freaking parallel universes yesterday. Forget the fact that companies aren't making any money. That's just a minor, trite little detail. But on top of that, let's think about what has happened in the last few months. All right, we're up at 3% right now. That's up from 2.6% in October, and also up from 1.9% in September. In 2 months, we've gone from 1.9 to 3. Does it look like inflation is coming down? Does it look like we have defeated inflation and that everything's going to be just fine and our monetary policy is sufficiently restrictive in order to return to our dual mandate of price stability and maximum employment and all those other stupid talking points we get from central bankers when they're causing problems for the rest of us? And on top of that, a big upward revision. October's number was previously reported as 2.4%. That was upwardly revised to 2.6. PPI looks really bad here. On a month-over-month basis, 0.4% month-over-month versus expectations of just 0.2%. Again, another big miss high and up from 0.3 in October. Core PPI, even worse. 3.4% year over year. So if you strip out food and energy, things look even worse. Inflation is getting worse for durable goods, for everything else. That's versus expectations of 3.2%. They revised last month from 3.1 to 3.4. So it looks like it's flat. It looks like core inflation didn't change from last month, but that's only because they quietly went back and revised last month higher. And I guess the one silver lining to this whole awful mess of PPI this morning, the core PPI month over month number wasn't so bad. 0.2% month over month for core PPI. That's in line with expectations and actually down a slight tick from 0.3% in October. So core month over month looked okay. Everything else looked awful. Upward revisions, big accelerations to the upside. This is a huge miss for inflation. Guys, inflation is a problem. It's still a problem. It hasn't gone away. Yes, it has come down, but for the last few months, it's heading in the opposite direction. And, we're acting like we need to stop fighting inflation and we need to focus on employment. They don't realize, in my opinion, the high inflation is the problem with employment. People are losing their jobs because people can't afford the cost of living. And so they're cutting out discretionary things. They're not going on vacations. They're not eating out at restaurants. And jobs are being lost in those fields. Inflation is the unemployment problem. And so when they're lowering interest rates everywhere to try to, stop worrying about inflation and fix the unemployment problem, they're going to bring inflation back and they're going to make unemployment worse. These people, these Keynesian economists that run everything, they've been taught the wrong thing for years in bean counter school. The Phillips curve does not work. They're going to break something. Case in point, initial and continuing jobless claims came out today, both upwardly revised. We had 242,000 initial jobless claims. That's up by 18,000 from last month. Continuing claims also rose to 1,886,000. That's up by 15,000 in the last week. So the employment situation continues to get weaker while inflation moves up, and the Keynesians tell us that's not supposed to be allowed to happen. Well, it's time to throw out your Phillips curve because it doesn't work. And even while all this is going on, even after CPI rising yesterday, even after PPI and its big miss this morning, what are central banks all over the world doing? They're easing. They're doing the wrong thing. Case in point, this morning, the Swiss National Bank surprised with their biggest rate cut in a decade, 50 basis points of interest rate cuts from the Swiss National Bank. And not only that, those muckety-mucks over there are saying that they can't rule out negative interest rates. In 2024, after what's happened with the cost of living all over the world, after all of the havoc these imbeciles have caused in the world, they can't rule out negative rates? I mean, we're setting a pretty low bar here. Can you at least rule out that you won't put negative rates in place? No, they can't. So what is going on behind the scenes in Switzerland that the Swiss are talking about negative rates here? Is there another bank, another big Swiss bank ready to go under? What aren't they telling us? Negative rates is just mad. It is insanity after what we've all been through with the inflation of the last few years to even consider negative rates. Grossly irresponsible. The guy should have been fired on the spot for even mentioning it, but there it is. Also going on yesterday, the Bank of Canada also cut by 50 basis points. This morning, you had the European Central Bank. They cut by 25 basis points. The Fed is largely expected to cut by 25 points next week, even after CPI and PPI today. Everybody is cutting while inflation is getting worse. Okay, we're beating the hell out of this dead horse this morning, aren't we? But I guess we got to keep beating it because this dead horse is still kicking. And the PBOC in China this morning, that they're actually going wild with the stimmies and with the monetary easing over in China again this morning. Now they've got a different problem. China's got a big deflation problem. China's economy is going to hell in a handbasket. They're not allowed to say it because all the messaging is so tightly controlled in that stupid commune, whatever, failed social experiment, what they're doing over there. But Jeff Snyder over at Eurodollar University did a really good video yesterday about the problem facing Chinese banks and this monetary-driven fiscal stimulus or whatever the heck the talking point was. PBOC is going crazy over there. Again, they're talking about more stimmies, more lowered rates, supporting employment, supporting the property sector, even as everything just keeps getting worse over there. And guys, they built entire cities that nobody lives in, and the population is shrinking. It doesn't matter what you do with monetary policy. You can't stop what's coming in that country, but they'll sure try. We got a lot going on in the world this morning, not to mention this freaking drone story in New Jersey. We'll talk about that at the end of the show. But for now, let's shrink my big melon of a head and see what's going on in markets. And this is where I cue you up to hit that big, beautiful like button for the YouTube algorithm. And if you're new here, hit the subscribe button right next to it because we do this every day. So come and have your wake-up juice with the melon heads as we go through markets. And right now, we've got the S&P is down 12 points. The market did not like that 1-2 punch of PPI and jobless claims data that came out right around 8:30 a.m. this morning Eastern time. Market took a little bit of a step change down, but it looks like it's bouncing now, heading back towards even. But for now, about 0.2% lower for the S&P. The Dow, I'm going out of order. That was the S&P. The Dow, meanwhile, down 32 points, 0.08% lower. Not as big a reaction from the Dow to that inflation print and to the jobless claims data. The NASDAQ, meanwhile, is down 99 points, almost 0.5% lower. So the NASDAQ's moving down with a little bit of momentum this morning here. But still, all things considered, stocks doing all right this morning. The DXY, meanwhile, is unchanged here, 106.71. Not a lot of reaction from the dollar. I guess that's because the market is saying the Fed's going to do what the Fed's going to do, regardless of what inflation and unemployment. They are on autopilot. They only see rate cuts, and, well, that's what they're going to do, I guess. Meanwhile, looking over at the bond market, oh, shoot, I messed it up. I clicked the thing, and I messed up my bond market. We got to get back. Now we got to scroll all the way down through all the countries of the world, all the stands, all of Europe. There we go. Where's the U.S. bond market? There it is. Okay. Sorry. if you, no offense to any of the people who live in the scroll past countries, but the U.S. bond market is the important one. The 30-year Treasury, 4.497. That's up about 2 basis points this morning. Pretty much everything else is down or flat. The 10-year is unchanged at 4.272. The 2-year, meanwhile, 4.143. That's down 1.5 points. And the 1 month at 4.36, also down 1.5 points this morning. Looking over at the commodities board, I'm seeing a lot of red here. Interesting. We got spot gold down $25, almost 1% lower, $2,692, back below 2,700. Spot silver, meanwhile, is down just a couple of cents here, 0.1% lower, 31.66 for spot silver. Guys, once again, I just want to point out that interview I did with Bob Coleman yesterday. I think Bob gave us some fantastic information, in particular, the part about exchange for physical premium. And Bob's explanation of what's going on in that part of the market and what it could mean. Highly recommend you check out that interview. Let's see. Copper, meanwhile, down 1/3%. Platinum also down 1/3%. Palladium is down 1.5%. And crude oil is also down 0.5% here, 69.93. And guys, yesterday, OPEC lowered their forecast for global oil demand again, citing concerns in China. Again, the Chinese economy is slowing rapidly, despite millions of barrels of oil a day being withheld from the market by OPEC. Still, they can't keep prices even in the $70 range because the economy is slowing. Now, we got another interesting story going on here this morning. In the last couple of weeks, we talked about things like cocoa futures were exploding higher because of this weird combination of weather and disease. We had coffee futures exploding higher. And this morning, it's citrus crisis, orange juice futures. All right, everybody, your homework. Go watch Coming to America. No, not Coming to America. That was the other one. Trading Places. Everybody go watch Trading Places because you can't talk about orange juice futures without mentioning Trading Places. It's pretty much a universal constant. But Florida's orange juice production slides to the lowest level since 1930. The U.S. Department of Agriculture has released an alarming new forecast for Florida's citrus industry. This is in Zero Hedge this morning here. The latest projection indicates orange production from the current season will total around 12 million boxes. That's the lowest since 1930, according to Bloomberg. And here you can see the actual production. It peaked in the early 2000s, and it's just been going down ever since. A devastating hurricane this fall compounded the damage already inflicted by the citrus greening disease, a bacterial infection that has decimated groves over the past decade. Orange juice futures have surged by $5 a pound, a staggering 433% increase from the COVID-era lows of around $1 a pound. Worsening supply constraints could squeeze prices even higher. Florida's orange production and citrus exports face an uncertain future as the industry struggles to recover from the dual blows of severe weather and disease. And take a look at this chart if you think I'm kidding. Now, these are daily candles, and we're going all the way back to the start of this wonderful decade that is the 2020s. And look, orange juice futures have been rising the whole time, but look at what they've done for the last 2 years. This is accelerating to the upside. And, you know, if we zoom all the way out here, I mean, let's set this to, I don't know, weekly candles. You can see this. This just keeps getting worse, but look at what it has done in the last year or two. Really bad data here, guys. So, yeah, you can add that to your coffee and to your cocoa. Now you got oranges. These dislocations in the commodities market, they're starting to reappear again. It's almost starting to look a little like 2022 again. Almost, not quite. Oil is heading in the wrong direction. Meanwhile, Bitcoin is back above 100,000 this morning, $101,005 as priced on Coinbase. That's showing it's actually down a little bit from yesterday, although we're higher than we were at this point yesterday. Bitcoin's looking pretty good here, still kind of consolidating after that big run up from the high 50s to 100,000. Now, there is a story that might affect Bitcoin, or should I say might be affected by Bitcoin. This is coming up in the next few days here. MicroStrategy shares could surge even higher if added to the NASDAQ 100 on Friday, crypto analyst says. Look, guys, we spent a lot of time talking about Michael Saylor's infinite money glitch and how the guy is basically, juggling burning bowling pins while standing on top of a powder keg with missiles pointed at him. Like, Michael Saylor is just an animal when it comes to risk tolerance. So, I mean, all of that aside, if MicroStrategy gets added to the NASDAQ, it's going to go even higher. It's just the simple fact of the buying that's going to happen here. MicroStrategy stock could surge even higher in the coming weeks, depending on whether the NASDAQ 100 stock index classifies it as a software developer or a financials business, a leading crypto analyst has said. The Virginia headquartered company could receive a major boost if it's included in the NASDAQ 100 index in a shakeup of the stock market on Friday. FundStrat's head of digital assets, Sean Farrell, said in a talk. Now, basically, guys, the crypto investment firm's stock price could now be boosted even further by new capital from ETFs. If it's included in the NASDAQ 100 index, you're automatically going to have a lot of buying if it gets added to that index, because all the funds that track the index are going to have to turn around and buy MicroStrategy shares. And, well, that could affect Bitcoin, because if you get a surge in MicroStrategy shares, what's Michael Saylor going to do? He's going to issue more stock and he's going to buy more Bitcoin. See also the infinite money glitch. So this thing could take on a life of its own here. Now, the one thing that's interesting, for a company to be listed on the NASDAQ 100, it must rank in the top 100 by market cap, have a trading volume of more than 200,000 shares a day, and be in any sector apart from the financial sector. That's a big one. Now, MicroStrategy's inclusion in the NASDAQ 100 would see the stock boosted by capital from the $550 billion in assets under management from ETFs that track the stock market index. That could lead to an electric period for the stocks, Farrell said. An electric period, not the word I would use. But let me ask you guys this. The whole thing, you can't be in the financial sector to be in the NASDAQ. What would you classify MicroStrategy as? I mean, okay, they're a software developer. What does MicroStrategy make? Like $20 a year in software? Does anybody even know what kind of software MicroStrategy even makes anymore? Is there like one guy locked in the basement? He's been there since 2000, the dot-com bubble, and they just kind of forgot he was down there, and there's kind of a smell coming from there. But he's still developing a little bit of software, and there's like one customer somewhere in Europe that still buys the shit. And so they're like, oh, no, we're a software company. No, MicroStrategy is a Bitcoin company. And in my opinion, MicroStrategy is a financials company, which would mean they can't go in the NASDAQ 100. But I'm curious what you guys think about that. How would you classify MicroStrategy? What sector is it in? By the way, I know I'm going to get all kinds of like Bitcoin hate in the comments and whatever. I look forward to reading that anyway. But I'm legitimately curious, what do people think? Is MicroStrategy a financials, or is it some other sector? If so, why? Let me know down below. Now let's talk about the big story of the day, the producer price index. And this is the one that was driving markets, at least for the last couple of minutes. Producer prices in the United States increased 3% in November of 2024 over the same month in the previous year. Producer prices, okay, they're talking about the averages over the last few years. Now, here is what the index is showing, 3.0%. That is up from 2.6 last month and from 1.9 the month before that. So, this is now the highest PPI we've seen in at least a year, way up from 2 months ago. Now, look, PPI, when the Fed cut rates by 50 basis points in September, even though now they're not in a hurry, I wonder why everything suddenly changed. I mean, tell me the Fed made a mistake without actually telling me. Look at this. PPI goes from 1.9%, the Fed cuts by 50, and PPI goes to 3% like that in 2 months. Tell me the Fed didn't make a catastrophic mistake when they started cutting by 50 basis points. And then yesterday, inflation comes in higher again, CPI comes in higher again, and there's no change. Everybody's like, nope, it's a bad print, but it's not bad enough. Fed's going to cut again. Rinse, repeat. They're making the same stupid mistakes. You might as well start telling us it's transitory. Just go ahead. Get it over with. Just rip the Band-Aid off. On a month-over-month basis, producer price inflation in the United States increased to 0.4% in November from 0.3% in October. So we've got another on a month-over-month basis. That shows inflation moving higher. Core producer prices, check this one out, 3.4%. That is unchanged from 3.4% last month, but that's only because they upwardly revised last month. It was 3.1% before that. So core inflation, core PPI remains sticky. And then on a month-over-month basis, we got 0.2% core inflation month over month. So that's really the only one that looks a little okay, because that's down from the prior month at 0.3%. So if you're one of those people with confirmation bias that's looking for the one silver lining that you can cling to say inflation is not that big of a problem, this would be it, your core month-over-month number. Everything else looks terrible in this PPI print. Now, while inflation is getting worse, both in consumers and producers, we've got this. Swiss National Bank cuts interest rates by 50 basis points, the biggest reduction in nearly a decade. Even though inflation is making a comeback and it's getting worse, the national banks are trying to make it worser by cutting interest rates. And not just a little bit. They're cutting by a lot of it. A 50 basis point cut, the biggest in a decade from the Swiss this morning. The Swiss National Bank cut interest rates by 50 basis points on Thursday, its biggest reduction in almost 10 years, responding to weaker than expected inflation in Switzerland and growing uncertainty about the global economy. The central bank flagged tepid price increases, rising risks around future U.S. economic policy, and political hazards in Europe as it reduced its policy rate from 1% to 0.5%, the lowest since November of 2022. And I'm just curious to people living in Switzerland, do you really feel like your cost of living and the increase in that has been tepid? All right, I get what the academics are saying. Oh, well, the year-over-year number, if you take this and that and the rate of change and everything, inflation is actually very low. Okay, that's fine. But let's talk about absolute price levels and the absolutely ridiculous level of prices. It's insulting to describe inflation as now tepid when people are still dizzy from the last time they got kicked in the gonads by the inflation whatever. Sorry, my metaphors were a little off this morning. My blood's up a little bit. You might be able to tell. But now this gets even worse. Let's look at some of these quotes here. With our easing of monetary policy today, we are countering the low inflationary pressure, said Swiss National Bank Chairman Martin Schlegel. We will continue to monitor the situation closely. And oh my God, am I so sick of hearing about things being closely monitored? That is doublespeak for we are not doing jack shit about something. We're closely monitoring the situation and will adjust our monetary policy if necessary to ensure inflation remains within the range consistent with price stability over the medium term. Talking point, talking point, talking point. He also left the door open for further interest rate cuts next year. They're only at 1%, but further cuts next year. He said it was now less likely that the Swiss National Bank could take interest rates below 0%, a possibility that he had recently flagged. At the current juncture, we cannot exclude negative interest rates in the future. Now, with these cuts today, the likelihood of negative rates has become smaller. Actually, when you cut interest rates and you bring us closer to zero, in my opinion, that means it is more likely that you go below zero, but that's fine. Go ahead and tell yourself you're not going to do it right up until you actually do it. Talking about negative interest rates in Switzerland. Good God. Bank of Canada says, hold my beer, eh? Bank of Canada cuts interest rates, says to expect a more gradual approach ahead. So they're cutting rates in Canada, too. The Bank of Canada cut its benchmark interest rate by 50 basis points for the second consecutive decision on Wednesday and signals Canadians should expect a more gradual easing of rates going forward. The move, widely expected by markets and economists, brings the bank's policy rate to 3.25%, the top of its neutral range estimate of 2.25 to 3.25%. Since June, the central bank cut its benchmark rate by 175 basis points over 5 consecutive decisions. With inflation back to target, we've cut the policy rate by 50 basis points at each of the last 2 decisions because monetary policy no longer needs to be clearly in restrictive territory, Governor Tiff Macklem said on Wednesday in an opening statement alongside the central bank's decision. With the policy rate now substantially lower, we anticipate a more gradual approach to monetary policy if the economy evolves broadly as expected. Canada cuts 50, Switzerland cuts 50, and then we got Christine the felon. European Central Bank cuts interest rates by 0.25 point in the 4th trim of the year. ECB is also cutting. The European Central Bank on Thursday announced its 4th interest rate cut of 2024, confirming expectations for a 0.25 point move and lowering inflation forecast for this year and next year. It takes the deposit facility, the ECB's key rate, to 3%. It had previously been held at 4% since September of 2023, prior to the first rate cut in June of this year. The central bank removed its repeated messages that it needs to keep policy rates sufficiently restrictive for as long as necessary, which was closely watched by traders. The disinflation process is well on track, the central bank said in a statement on Thursday. Do you guys feel like the disinflation process is well on track? I'm looking at U.S. inflation, and then I'm criticizing European policy decisions. So maybe we're not comparing apples to apples here, but I just think all of these muckety mucks, they are really going to regret so quickly declaring victory over inflation after so quickly telling us that it was only transitory and it wouldn't become a big problem. In my opinion, they're wrong about both. But you know what? Keynesians are going to Keynes, so I guess we shouldn't be too surprised. And meanwhile, China signals more fiscal stimulus and rate cuts to lift growth. Guys, I just want to again recommend Jeff Snyder over at Eurodollar University. He put out a video yesterday about China and their deflation problem and problems in their banking system. Highly recommend that one. And then I saw this article this morning that pretty much lines up with that. China signaled further stimulus measures, including raising its budget deficit ratio in 2025 at a key economic meeting that sets policy priorities for the coming year. Top officials led by Xi Jinping also vowed to deliver rate cuts and lower the reserve requirement for banks during a 2-day huddle in the Central Economic Work Conference in Beijing, according to China's central television. China will need to maintain economic growth and ensure overall stability of employment and prices next year, the state broadcaster reported after the meeting. So what they're saying here, we need to maintain economic growth. That means we are going to print and spend our way to prosperity because that always works so well. Ensure the stability of employment. We'll print as much money as we need to make sure people don't lose jobs. And they also want to ensure the stability of prices. Now, China is the one place in the world where they're actually experiencing rampant deflation right now. So China is trying to create inflation in order to fight that. I'm sure they're going to do a great job, and it's definitely not going to have unintended consequences that ruin the lives of hundreds of millions of people. It's probably going to go really well, like government intervention always goes so well. Note sarcasm. China will also increase the issuance of ultra-long special treasury bonds and local government special notes next year, which are important sources for infrastructure investment and other public spending. And again, to a hammer, everything looks like nails. They're going to issue all this new debt to try to prop up infrastructure spending in local governments. This is what caused the problem to begin with. This local government financing vehicles creating all this hidden debt and all these silly infrastructure projects that nobody needed, but we've been funding them with debt in order to just keep our artificial GDP growth going. And now they're like, well, since that caused a big problem, we're going to go ahead and do a whole bunch more of that. And that's a totally reasonable reaction to that. Note sarcasm. Kobayashi Letter had a fantastic thread on this one this morning on Twitter. I'm not going to read the whole thing because it's very long, but he did a really good job summarizing just how bad things in China are right now. He says China is panicking. Today, China announced that widespread economic stimulus is coming in 2025, including raising their deficit. Currently, parts of China's real estate sector are down 80% from their high at 2008 levels. Is China entering a recession? Oh, yeah, definitely they are. To put things in perspective, China's HY real estate sector entered 2024 down 82% in just 2.5 years. Meanwhile, one of China's largest property developers, Evergrande, filed for Chapter 15 bankruptcy. Real estate demand in China collapsed with the onset of deflation. And you can see this HY real estate ETF here just absolutely plumbing. This is an index, I'm sorry, not an ETF, but down 82% since the beginning of the Evergrande collapse. Currently, China is facing its longest period of deflation since 1999. Not even 2008 came with 5 consecutive quarters of deflation, as we're seeing now. While everyone is fighting inflation, China is dealing with severe deflation. This is arguably even worse than inflation. I personally don't agree that deflation is worse than inflation. I think deflation rewards responsible people who save money, who don't recklessly spend. And, well, those people are definitely the minority in this world right now. The world is run by reckless idiots who rack up debt. And so viewed through that lens, deflation is worse because the reckless idiots are punished. And in my opinion, the reckless idiots should be punished and not the responsible savers. That's why I would prefer to see deflation versus inflation. Neither is really desirable. You want your currency to be stable. You want the economy to go up and down with a stable currency. Anyways, Kobayashi Letter, he goes on and on to mention a lot of different data points, things going wrong in China. I highly recommend you check out this thread this morning, guys. Pretty good information in that. And a couple quick data points here. Initial jobless claims in the United States increased to 242,000 for the week ending December 7th. That's from 224,000 the previous week. So initial claims have now risen a couple of weeks in a row. That was an increase of about 18,000 people losing their job this week. And then continuing jobless claims also rose to 1,886,000 or 1.886 million this week. That is up from 1.871 million, an increase of about 15,000. So we've got inflation rising and unemployment rising both at the same time. The Phillips curve says that shouldn't be able to happen, and yet it is happening. I've said it over and over again for the last couple of days. The reason why we're seeing higher unemployment right now is because of the inflation. And so lowering interest rates in order to fix the employment problem is going to make it worse. Stop messing with things, Fed. Just take your hands off the panel, sit back in your chair, have some coffee, and let the economic ship right itself. If you can, do nothing if you can. Sometimes it's hard for people to do nothing. And last but not least, we need to talk about this subject here, guys, the drones in New Jersey. Yesterday, there was a lot of development around this story. The whole country was freaking out midday yesterday when Congressman Jeff Van Drew from New Jersey, a Republican, he used to be a Democrat, he changed parties a few years ago. He came out and basically said he had it on good authority, anonymous sources, that there was a mothership, a boat offshore in off the New Jersey coast that came from Iran that was launching these drones, and with a rather urgent tone in his voice was saying these drones need to be shot down right away. Shortly after that, a Pentagon spokesperson in a press conference pretty much denied that, used some wishy-washy language, said, we have seen no evidence that this is a state actor operating these drones. She didn't say it wasn't. She said, we have no evidence of. Well, that's not surprising because you're not doing jack shit about this thing. And so, we have no evidence. That's because your eyes are closed and your fingers are plugging your ears on this issue. They also said that they denied that there were U.S. military drones. So you've got Congressman Van Drew saying, not ours, they're Iranian. The Pentagon saying, not Iranian, not ours. And then you had Congressman Jack Smith, or Chris Smith, I can't remember his first name. Congressman Smith, also from New Jersey, was yesterday giving an interview where he described a scenario where 10 to 30 of these drones, the size of an SUV, were following a U.S. Coast Guard cutter off the coast of New Jersey. And the Coast Guard captain had no idea what to do about it because they have not been provided rules of engagement with how to deal with this. Fort Dix yesterday released a statement that said they have the capacity to bring the drones down, but they don't have the authority to act. Who has the authority? What the hell is going on here? Do we defend our own airspace, or do we only defend airspace in other countries that have nothing to do with us? What a total lack of leadership here. Look, guys, I remain of the belief that they're probably ours. It's the simplest explanation that these are ours. But at this point, when you've got the military saying they're not ours, congressmen don't know what the hell is going on. One guy's saying Iranian. You got the Pentagon saying local law enforcement is leading the investigation. What kind of feckless, ridiculous lack of leadership is going on here right now? There is a fleet of hundreds of SUV-sized drones operating over the most densely populated part of the country, including our military bases, and nobody is doing a damn thing about it. WTF is going on? Please, somebody, hey, Dr. Jill, why don't you tap that feckless potato on the shoulder, wake him up from his nap, and say, give the order to shoot one down so we can figure out where the hell it came from? Or maybe, hey, Lloyd Austin, maybe take a break from all those important policy decisions you're implementing over at the DOD and actually defend our freaking airspace. We spend $1 gajillion a year on our military, and we can't stop a fleet of freaking truck-sized drones from operating over our cities? What the hell do we spend all the money for? What are the fighters for? What are the missiles for? What is any of it for? People are looking out their window and seeing freaking UFOs outside, and they don't know where they're from, and they're freaking scared, and nobody is saying or doing a goddamn thing about it. Inexcusable. Inexcusable. What a horrible lack of leadership on display in this country right now. Jack, get off your soapbox. Sorry, it's my home state, and these things are in my hometown, so I'm a little passionate on the subject. Thank you, Charles Coughlin says negative rates incentivize the use of cash. Yes, they do. They penalize savers. Not only do they not reward savers, they penalize savers. You need to pay a price for the privilege of keeping your money in the bank. So what's the end result? Yeah, you better hurry up and spend it before it loses value. That's what negative rates does. And yeah, after what we went through in 2021 and 22, that seems like a totally rational thing to do, right? It's not like inflation has been a problem in this decade after they told us it wouldn't be. Yeah, go ahead with your negative rates. Good luck. Good luck ruining people's lives. No, I hope it goes really well. Thanks. Keep up the bad work. Thanks for the support, Charles Coughlin. I appreciate the super chat. You're right. It incentivizes reckless spending. Absolutely, positively. Nashville Pasta Man, thank you, sir. He says, EFP, new favorite buzzword, referring to exchange for physical. which is not an exchange for physical. It's actually a paper trade involved in the gold segment. Excellent interview. Thanks again, Pasta Man, for referencing the interview I did with Bob Coleman. Really, guys, it was a long interview that I did with Bob. It was excellent. But at the very least, I highly recommend you go in there and you watch the segment on exchange for physical. I did put chapters in the interview. If you want to skip around, that's fine. But in my opinion, what Bob said about the EFP market was very important and what that could potentially mean. I think the whole interview was great. Bob has forgotten more about the precious metals trade than I could ever hope to learn. But that EFP, that was a wow moment for me. And Bob has made some pretty good calls this year, so it's worth checking out. Thank you, Pasta Man, for supporting the channel. Thank you, Harmonair LLC, who says, add scurvy to my 2020s bingo card. 2025 bingo. Okay, the 2020s bingo card was getting too crowded, so we got to narrow it down to individual years. Yes, global scurvy, because we can't grow oranges anymore. Really expensive OJ on the horizon there. That chart's really shocked me. I knew there was issues with oranges, and I had heard about the green skin disease going on with the trees, but I never zoomed out on the chart. This thing has been a long time coming. So add OJ to cocoa and to chocolate and some of the other commodities that are going vertical again. Thank you, Harmonair LLC. Appreciate the super chat and the support of the channel. Joey Socks, a.k.a. Paulie Walnuts. What's going on, brother? He says, New Yorkers could get inflation refund checks. Helicopter money to fight inflation. Yep. Thank you, Governor Hochul. And in totally unrelated news, we're going to take the fire trucks. We're going to drain all the water from the fire trucks, and we're going to fill the tanks with gasoline and spray that on the fires, and then pretend to be surprised when the fires don't go out. That is the equivalent of what Governor Hochul's talking about doing in New York. They're talking about doing helicopter money again. They're calling them inflation refund checks. Great. I'm sure that poll tested very well in focus groups. Inflation refund checks. It's freaking helicopter money, and it's going to make inflation worse. And that'll go nice with the negative interest rates over at the Swiss National Bank. These people are not psychologically equipped to deal with the problems facing the country. Thank you, Joey Socks. I appreciate the super chat, sir. Steve Woitis says governments and their central banks secretly love inflation. Oh, you are so right. They gather in secret with their inflation, and they cuddle, and they put inflation's hair behind its ear and whisper little sweet Keynesian nothings into inflation's ear. They bring inflation flowers and chocolates, and not even on Valentine's Day, just like on a Wednesday. Oh, they just love inflation. There ain't nothing secret about it, Steve. Abso-freaking-lutely. Enriching themselves and reducing the value of government debt with newly printed money and dropping rates, all while making y'all's lives miserable at the same time. What is not to love? It is a very they with a capital T thing to do. Thank you, Steve Woitis. Appreciate the super chat, brother. And Brojo's 420 Cafe, a place where I wouldn't mind stopping for a bite to eat. He says everybody must cut rates and get Stowe Ned. Yes, Ned. Ned can do whatever Ned wants. If that's what Ned wants to do, I'm not judging. Let's just cut rates, and you might as well light one up, because inflation's coming back, guys. It's coming back. Be prepared for it. Own some shiny. Prepare yourself. Develop a skill. Learn how to fix things. It's entirely plausible that we are going into this 1970s-like period where there were 3 distinct waves of inflation because they prematurely declared victory and brought it back. And Brojo, I share this sentiment, brother. Thanks again for the super chat. P-Nice, thank you for being a melonhead for 4 months. He says 51 government economists stated the drones are bad vibes. Is that the same 51 former defense officials that said a lot of things recently? 51 government economists stated the drones are bad vibes. You know, maybe the drones are really good for the economy. Let's just hypothetically throw out a scenario here, P-Nice. You know, we're just thinking outside here. Just gonna throw it out there. Let's say hypothetically the drones are privately owned by somebody with deep pockets, Lockheed, or maybe a McDonnell Douglas, someone like that. And let's just say, hypothetically, we're going to scare the crap out of people. We're going to have the military and law enforcement act like they're helpless. And then when we're all having the debt ceiling argument next year, hypothetically, we might introduce an amendment or some kind of earmark for a gajillion dollars of anti-drone technology that just so happens to be being developed by the same people who maybe are causing this drone scare. You think, would you put it past the military industrial complex to operate these drones in the part of the country where they are guaranteed to be noticed and scare the most amount of people, create problem, and then offer solution. Would you rule that out in the 2020s? I wouldn't rule it out. I wouldn't. I don't know what's going on, though. That's just one plausible theory. I do think the simplest explanation is that they're ours and that they're lying. But, yesterday with the stuff with Van Drew and then the stuff with the Pentagon spokesperson, you're like, who's lying, Congress or the Pentagon? Yes is the only correct answer, right? Two institutions notorious for lying all the time about everything. Which one is lying? I guess the answer is both of them are. Thank you very much, P. Nice. Appreciate the super chat. And thank you, Tanisha, for the super sticker. Thank you, Tanisha. The super stickers don't come up on StreamYard, but it says critical hit. I love it. Critical hit. I'll take that one. Thank you, Tanisha, for the laugh and for the support of the channel. And thank you, everybody, for having your coffee with the melon heads. Don't forget to bring your umbrella with you to work today, just in case the drones decide to start peeing and pooping on everybody. Who knows? Thank you so much for the super chats and the support of the channel. Thank you to my Patreon supporters and magnanimous melon heads on YouTube for everything you guys do for the channel. Links down below should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Till next time, live small and dream big.